Welcome back. Well, a pressured day for the markets, but the IPO market continues to be quite robust. Let's focus on that. In fact, Amagi Media Labs, which is a global SaaS company founded in 2008, will launch its IPO soon. The total issue size is around 1740 to 1789 crores, with a price band of 343 to 361 rupees. Rima caught up with the management of the company. Listen into a slice of that conversation.
Amagi Media is like rightly pointed out, it's a SaaS company. We provide software for the media businesses. We work with TV channels, content sports producers, news content creators, studios worldwide, providing them an ability to do three things that we do for them. Enable them to run their media operations on the cloud, largely helping them to move from a hardware on-premise infrastructure that typically we have for TV channels today to run on a software on the cloud as the base first thing that we do to them. The second thing that we do is help these companies to take their content worldwide by distributing it across all the OTT platforms that's available across the globe. We do it close to almost 300 plus platforms in 40 plus countries that we take their content for them today. The third part is once you're distributing, we enable them to monetize the content through advertising, which provides the monies that actually drives the whole content business today.
And name some customers?
We have customers like Fox. Network 18 is a customer of ours, for example, from an India standpoint today. We work with 45% of the large M&D companies in the world, which are publicly listed today. Work with Amagi already. We work with the likes of Lionsgate. We work with Roku from a streaming standpoint. We work with Vizio, which is part of the Walmart group right now that we work with. 90% of our business comes from US and Europe. That's the biggest markets for us.
So you said there are three sources of revenue. One is moving all the hardware to the cloud. So earlier you would have satellites, etc. Now it's all on the cloud.
Correct.
The second one is distribution.
Correct.
And the third one is monetization via ads. Can you break up the revenue contribution from each of these three segments and which one is growing fast for you?
Okay. If you look at it, we segment our business into what we call cloud modernization. Second is what we call streaming unification, which is the distribution part that we talked about. Third is the monetization. I'll ask Vijay to give a help on the numbers.
Roughly 20% of the revenue comes from cloud modernization. About 55% comes from streaming unification, and the remaining comes from marketplace and monetization.
It's 25%.
Yes, exactly. Yeah. So to your earlier question, like I said, we're seeing secular growth across each of these three segments.
Particularly, zooming in on one of the, monetization. What about big tech companies? Because you have Google ads, you've got Amazon ads, you've got YouTube, and they're also helping, or handle digital ads at scale, right? What is the overlap? And is that not a risk for you? They could probably commoditize the business.
In the monetization business, we are a technology company providing TV channels and content creators an ability to insert advertising in the system. We don't participate in the advertising economy. What I mean by that is we don't sell advertising. For example, we work with, let's say, a Fox or a Lionsgate, for example. Lionsgate is a studio which actually has content, and they want to take this content and create TV channels which can be distributed worldwide. Incidentally, Lionsgate obviously distributes it across multiple countries and different platforms. Platforms where they would like to own the advertising, Amagi provides an ad insertion capability where we connect with ad networks. We work with multiple different ad networks in the world, including the likes of Trade Desk, which is one of the largest in the US. We work with Magnite. We work with 120 plus ad networks where we connect to the platform. So from a technology standpoint, we don't compete with any of these big tech because we actually provide this as a content owner's technology, we are not an ad network ourselves.
Now, FY25 was your first full year of EBITDA profitability, and H1, FY26 was the first full year where at the bottom line you showed a profit. What changed? Is it just scale? And will you be profitable going ahead?
You're right, like full year, 2%, first half year at about 8.3% of adjusted EBITDA. So we got three big cost buckets, Rima. One is cloud costs, with sales and marketing and R&D. And if you look at, I'm guessing you've seen the NRR number, which is equivalent to same-store sales, if you will. So a lot of our growth comes from existing customers who adopt more services, more products, more offerings. So we've seeded the cost structures for these customers, because if a customer is growing 3x, you don't need 3 times the same rep, right? By design, sales and marketing leverage plays out because of that. And we take a platform approach to building our products, right? So because the platform is a standard across many customers, you don't have incremental engineering costs and product costs when you're going and selling to different customers as well. So the 2 cost buckets tend to leverage because of that. And the third big cost bucket is the cloud cost, which is a combination of commercial leverage that we get and some hygiene initiatives that we run internally. So you saw probably our gross margin went up from 65 to 70% almost in the first half.
All right, that's the IPO KYC segment, understanding everything about Amagi Media.